Here in Nigeria, the Group Managing Director of the Nigerian National Petroleum Corporation, NNPC, Mr. Mele Kyari, says Nigeria has over 50 cargoes of crude that have not found a landing spot yet. He added that the corporation will strategically put in place measures that will reduce the cost of crude oil production in Nigeria and create a market for the nation's crude. He painted a grim picture, revealing that there is over 12 stranded cargoes that you just mentioned of NLNG, as liquefied natural gas, because of the collapse in oil and gas demand. Liquid crude was also badly hit, adding that Brent crude prices have slumped to about $37 per barrel on the back of slowing global demand brought on by the coronavirus and the fight for market share by Saudi Arabia and Russia. Price is now, in fact, actually $34 a barrel. Now, joining me to discuss this in the studio is Mr. Ayodeji Ebo, Managing Director at Afrinvest Securities. You're welcome, sir.
Yeah, good morning.
Good morning. Good morning. Great to have you. Great to have you. So, yes, please, let's begin with that, with what we're seeing with Nigeria's, cargoes not yet being able to offload because of lower demand, and then the possible response from the folks at the helm of our economy and what they could do. What are your thoughts on that?
Interesting. What the revelation yesterday, or in terms of the statement he made as the head of the NNPC, Mr. Mele Kyari, further buttresses the challenges that Nigerians need to brace up for. If you look at in terms of how our revenue is tied, it's majorly when you break down the budget in terms of the projected revenue, oil still accounts for a major part of it. Apart from that, in terms of FX, so that's very significant. So for Nigeria to have stranded cargoes, about 50 crude cargoes, it means that the demand for the crude will reduce significantly. So in terms of the revenue, and when you also look at in terms of the cost, he hinted that the cost, Nigeria would be at a loss if crude oil prices falls to around $22 per barrel. So currently, a little over $30 per barrel. Yes. So you look at in terms of how government will get their revenue. So for some of the production sharing contracts, it's after you recover your costs before you can even share. So for the government, it means that for a lot of the production that may be taking place, if oil prices months, that the revenue from that angle would not be on the table. And the major implication of this is that we know most of these states rely more on FAC allocation. Right. So by the time we begin to see significant decline in FAC allocation, then just this year, minimum wage was reviewed. Most of them could not cope with the last 18,000 naira minimum wage. So now that it's 30,000 naira, it means that a lot of the state governments will not be able to pay. Looking at it, also looking at the impact on the banking sector, you look at in terms of how the banking sector structured their loans. Over 40% of their loans is allocated to the oil and gas space. If most of those loans that have been performing for most of those companies now, in terms of the demand for their product, would be impacted. So as a result of that, they may not be able to service their loans as at when due. That may have a major impact even on the non-performing loans of the banks. So the implication is really significant, is huge. I know the essence of meeting yesterday was to see how they can strategize, but we know in Nigeria we're always good at, in terms of strategizing. The major thing that we need to do is implementation. This is not a surprise. We've continued to talk about diversifying our revenue base. So this coming as a surprise to the government that's they've been in power for the last 5 years. So that's very worrisome that nothing has really happened in terms of diversifying our revenue base. So the populace or Nigerians needs to brace up for the major impact that if this is sustained for the next, low oil price is sustained for the next 3 months, 4 months, then there will be a major hardship would increase significantly on Nigerians.
Not a pretty picture. Okay, so we've looked at the impact now, but I believe the hardest question that is, ever since this was announced yesterday, that everybody's talking about, the business community and beyond, is what can they do? I know.
Yes.
What in the short term
they do?
Right.
In the short term. For what they can begin to do in the short time to see how they can quick increase partnership with private investors. So they need to create like an atmosphere or policies that would attract private investment. But all these investments will not yield results in the short term. But you need to begin to see that you don't have the revenue to finance most of these projects.
Right, right.
So how do they need help. They need to partner with private investors. But private investors, for most of them, are not comfortable with the way we don't honor our contracts. So that needs to be reinforced, and they need to be able to show the green light that they are ready for business, so that we can get a lot of investment. In terms of the markets, so if this oil price continues for maybe the next 3 to 6 months, the CBN may need to review the current exchange rate. It's based on, when you check in terms of the data that was just published, trade deficit is going to about 500 billion. That's very significant. Beyond that, when you check, transfer dollars this week have moved to, there's a difference between the cash dollars and transfer dollars.
Yes.
The transfer dollars have moved to almost 380 as of yesterday. Because the transfer dollars can be used for investment and can be wired out. So the pressure will continue to mount. It may be good for the CBN to see how they want to adjust the exchange rate early enough to reduce the impact that it may have. Because once you begin to have a lot of pent-up demand and they are unable to supply as required, we've seen the foreign investors selling significantly, both in the fixed income market, both bonds and OMO. They have been selling significantly, and what they want to achieve is to repatriate
their funds
abroad.
Yes.
So CBN needs to fund that. Reserve is still a bit above $36 billion, but when we check the rate at which it's been depleting in the past few weeks, that is sustained. By the time you do run your calculation, within the next 90 days, it may be eating around $33 billion, which is closer to the guideline threshold that the CBN governor gave to us, about $30 billion.
Right.
So for the CBN may need to take action, though, because we're import dependent, it may have impact in terms of on the prices of goods. But when you see the demand for the dollar, it's really increasing. To reduce that demand, what the CBN has to do is to increase the price of accessing the dollar.
Right.
To reduce the pressure as much as possible.
Wow. Okay, so you've given us some solutions. Thank you. Thank you. Okay, now you mentioned the fixed income space. I want to turn to that. Very appreciative on Twitter, almost on a bi-weekly basis, you update a number of us with the results of the primary markets auctions of the Nigerian T-bills. The latest auction that took place, I believe, was yesterday.
Yesterday,
yes?
yeah.
Let's talk about where rates are. I mean, it's a pretty low. I believe the 91-day 2.4, 81, 82 3.7, 364 5.3. So all below inflation. Yet the subscription is still very, very high. I wanted to get your thoughts. What does the continued trend of oversubscription say about the risk appetites of investors?
Yes, I think we look at the bulk of the result just shows that there are limited options for major investors.
Right.
And you look at the major investors that participate in the auction, you have the PFAs and most of the fund managers. And you will have maybe a few retail investors.
Right.
So because they are limited option in terms of where they want to put their funds or their willingness to take risks, with what is happening in the equities market, for some of the PFAs that even took that boldness to invest in the equities market in January, their portfolio will be looking terribly bad now.
Right, right.
And so the only option that they have now on the table, or the main option that they have on the table, it's these equities. Pardon me, it's fixed income.
Right.
But you also look at, for the banks, deposits is also reducing because of, deposit rate is also reducing because of liquidity.
Right.
So because of that target of loan to deposit ratio, they also limit the amount of deposit that they take, because the more deposit that you take, the more assets that you need to create.
Right.
So in an environment where global growth is slowing down, a lot of events are being cancelled now. In terms of demand, it's also reducing. So the ability, even looking at our domestic economy that we're bracing up for a major impact in terms of the negative impact that we may get as a result of decline in oil prices. Banks may not be too comfortable to lend now, because if manufacturing companies, if the demand is not sustained as it used to be, then they may be forced to downsize, they may be forced to reduce production, and that has significant implication across the country. So banks will also limit the amount of deposits they can absorb as much as possible, so that they are not debited or levied by the CBN when they look at their loan-to-deposit ratio. Right. So when you look at those scenarios, it means that the PFAs or the fund managers will be happy to keep their fund at any rate in fixed income instruments. And I know fund managers are working on trying to come up with structured products, because this is the time at lower interest rate now. This is time to come up with structured products. Right. We've seen corporates also issue commercial paper, but in terms of the available liquidity, the size is still very minimal. So this is also the time for some corporates that have good rating and can see their consistent cash flow to refinance their expensive loan for them to reduce their finance costs. Okay. Some can even take advantage of long-term bonds, so that if you want to go into some of expansion, you can go into long-term bonds that you can use for your expansion, and you can issue it at very attractive rate relative to what you would have gotten before if you are looking at this kind of option in the last 6 months or 1 year.
Fantastic strategies you're giving us here. Okay, so does that mean, with the way this conversation is going, the equities market, no-go area? I only have you for more time. We only have 30 seconds. Is the equity market a no-go area?
It presents a lot of opportunities now based on a dividend yield perspective. Dividend yield, Zenith trading almost at 10 naira today. Yes. When you look at, it's ex-div, but you also look at GTB Bank trading at 18 naira. By the time you look at the dividend yield, or 2 naira 50 kobo, it's in double digits. UBA too is almost 15% dividend yield. So investors can go in gradually in tranches. We are not saying the market has bottomed out, but it presents opportunities for them to buy for the long term.
Ayodeji Ebo, Managing Director of Afrinvest Securities, thank you so much for joining us. We appreciate your insight.